Welcome to Talk Tickers. Today, we're breaking down the January 30th earnings report from Franklin Resources. That's ticker BEN. And there's a really fascinating puzzle right at the heart of this story.
Okay, so let's just dive right in. On the surface, this report was, it was kind of confusing. You look at the official number, the GAAP earnings, and they missed 46 cents per share. But then you look at the adjusted number, the one Wall Street really cares about, and they blew it out of the water at 70 cents. That's a huge 15-cent beat.
So that's the big question, right? With a miss on one hand and a beat on the other, why did the stock pop almost 3% on some pretty heavy volume? Today, we're going to unpack exactly why the market cheered this report, because the answer tells you everything about what investors are actually looking for right now.
And the answer is pretty clear once you look past that headline EPS number. You have to dig into the core operational health of the business. The market saw a story of fundamental strength that just completely overshadowed any of the accounting noise.
First thing, let's talk revenue. It was incredibly strong, $2.81 billion. That came in a full $360 million ahead of what Wall Street was expecting. I mean, that's not just a beat, that's a blowout. And it's our first major clue that the underlying business was absolutely firing on all cylinders.
And next, this is the real story here, the flows. A massive $28 billion in net new money poured into their long-term funds. Look, for an asset manager, this is the single most important signal you can get. It's client demand, it's forward momentum. This number was an absolute showstopper.
And all those powerful inflows, what do? They push total assets under management to a brand new record of $1.68 trillion. This creates a much bigger, much more stable base for them to generate fee revenue from in the future. So you take it all together, strong revenue, incredible flows, record assets. It paints a picture of a company with some powerful underlying health.
Okay, so the numbers themselves showed some serious operational strength. But then you add in management's commentary on the earnings call, and that just reinforced a strategic narrative that investors clearly, they bought into it, hook, line, and sinker. CEO Jenny Johnson really hammered this point home. She talked about a huge shift in the industry. She argued that clients, both big institutions and regular investors, are consolidating their relationships. They want a holistic partner that can do everything, public and private markets, not just sell them a single product. This quote, it just perfectly frames how Franklin is using its massive scale as a huge competitive advantage.
And this wasn't just a one-off comment either. The entire call was framed around these core themes. Management painted this really clear picture of a company that isn't just riding a market wave. No, they're actively executing a long-term strategy to build a more durable, a more diversified, and ultimately a more profitable business.
So that was the quarter that was. But what's next? Well, beyond the strong results, management also laid out a really clear path for future growth and, maybe more importantly, for expanding their profit margins.
And their strategy isn't a one-trick pony. They're attacking this from multiple angles. They're pushing hard into those high-growth, high-fee private markets. They're pioneering new technology. They're aggressively going after wealthy clients. And all the while, they are keeping a really tight lid on costs to drive that profitability.
One thing management spent a lot of time on was their leadership in tokenization. Now, in simple terms, this is all about putting real financial assets onto a blockchain. They believe this is going to fundamentally modernize the entire financial infrastructure, create massive efficiencies, and dramatically lower costs. They see it as a long-term game changer, and they intend to lead it. And you could really tell what Wall Street was thinking about during the analyst Q&A session. The questions just drilled down on those long-term margin targets, on M&A, the impact of tech like AI, and probably most importantly, they kept asking, hey, were these massive flows a one-off, or is this the start of a whole new trend?
So we've seen the powerful numbers, we've heard the forward-looking strategy, but how did all this actually translate into stock performance? I mean, what's the final verdict?
And the numbers here, they tell the whole story, don't they? In the months surrounding this report, Franklin Resources stock surged over 11%. It absolutely crushed the broad market, which was basically flat, and its own financial sector, which was actually down during that same time. That's a statement.
And that, right there, solves our puzzle from the very beginning. The market looked straight through the accounting noise of that GAAP miss, and it voted, very decisively, in favor of the fundamental business momentum and the compelling strategic story that management laid out. So with that puzzle solved, let's look forward. Here's our take on what to expect from Franklin Resources. This is The Next Call.
All right, so moving forward, what are the key things to watch? First, those monthly flow reports. We've got to see if this momentum continues. We're also going to be watching for updates on their big alternative funds and really any sign that they're maintaining that expense discipline to drive the margin expansion they've been talking about.
Okay, time to put some numbers on it. Here's our call for next quarter. We're forecasting continued strength. We see adjusted EPS ticking up to 72 cents and revenue climbing to $2.85 billion. Now, we do expect flows to cool off a bit from this quarter's blowout number, but to remain really solidly positive at around $15 billion.
So what does this mean for the stock price? Well, based on this outlook, we believe the stock has further to run. As long as management keeps executing on this strategy, we fully expect the stock to continue its outperformance and start testing the high $20 range in the near term.
Which brings us to our official rating on Franklin Resources, Outperform. We just believe the strategic pivot and the powerful operational momentum we saw this quarter are not yet fully priced into these shares.
And this really leaves us with a key long-term question for the company and for its stock. Was this quarter just an anomaly, or is it the first real, concrete proof that Franklin's transformation into a diversified asset management powerhouse is finally paying off?
This is not financial advice.